In this video, we'll be looking at 5 different stocks that, in my humble opinion, are currently on sale. Now, some background on me: I currently have over 7 figures invested in the stock market, and during this most recent dip, I have been buying more and more discounted stocks like crazy. Now, during market pullbacks like the one that we've been experiencing as of recently, these are where the fortunes can honestly be made, and these are where investors like myself that have a long time horizon ahead can lock in some super high yields on some high quality stocks if we play our cards right. Now, that's exactly why I think it's important to always keep some cash balance to be able to have some dry powder when the opportunities come about. Now, make sure to stick around, drop a like, subscribe, and let me know which ones of these stocks are your favorite down below. So the first company, the first stock that I happen to think is on a nice sale as of right now is ADC, or Agree Realty Corporation. Now, Agree Realty really hasn't crossed over my desk all that much since I started investing, because for the most part, Agree Realty doesn't really offer all that much of a high starting dividend yield compared to that of something like Realty Income historically. But during the recent absolute bloodbath when it comes to REITs and pretty much all stocks across the board, Agree Realty is offering a nice healthy entry price, in my opinion, at around $55 per share, which is basically snug next to the 52-week range low. Now, Agree Realty is down around 22% year to date, and down around 20% over the last year. But max time frame, Agree Realty is up almost 190%, and that's not even including dividends. Now, maybe you're not aware of what Agree Realty really is, but it's a really high quality REIT, and they own and lease out to some of the highest quality tenants across the world, people like Walmart, Costco, and others. Now, like I was saying, Agree Realty is offering a starting forward yield of around 5.28%, which is right in my wheelhouse. I love buying REITs when they get to the 5 or 6% forward starting dividend yield range, especially when treasuries are as high as they are. It needs to make sense. Now, on top of that, Agree Realty is a monthly dividend payer, and over the last few years, they actually have raised the dividend a little bit over time. And even though the dividend growth isn't as fast as maybe some other stocks or ETFs out there, it's sort of in line with most other high quality REITs like this one. Now, the next high quality, high yielder that's on sale right now, in my opinion, is ticker symbol MO, or Altria Group. Now, over the last 7 years or so that I've been investing, I've been sort of back and forth with Altria if I want to add it to my portfolio or if I want to kind of stay away from it. And as of right now, I think collectively I probably have a few hundred shares of Altria, so it's definitely not the biggest portion of my portfolio, but in these most recent prices, it's definitely gotten my attention a little bit. Now, Altria trading pretty close to the 52-week range low at around $42 per share. I've been picking up Altria a little bit closer to $40 per share, which is offering a starting dividend yield of around 9.3% or so. Now, I go sort of back and forth when it comes to Altria because, of course, the business model that Altria is, and the fact that over the last 5-10 years, the actual growth has been sort of lackluster. But of course, with Altria's massive dividend and some recent dividend growth even, this actually is a stock that does match my strategy at this point, and I will most likely be grabbing some more shares if we see Altria at 40 or below. Now, another sort of accidental high yielder that I've had my eyes on for a little bit now is AMT, or American Tower Corporation. Now, AMT is a really high quality telecommunication REIT, and it's trading basically at the 52-week range low of around $162 per share. Now, AMT's been crushed year to date, down almost 25%, last year down around 26.5%. Now, AMT historically does have some massive growth potential. AMT was almost at $300 per share just a matter of a few months back. Now trading at $162, AMT could be offering a massive opportunity, and opportunities are definitely there when it comes to the starting forward dividend yield of around 4% more or less. Now, this is huge considering AMT, because of the growth potential, is normally historically a stock that I've seen yield around 2%, maybe even 2.5%, but with a forward starting dividend yield of almost 4%, this one is definitely on my radar. Now, as far as a price target for AMT, obviously, of course, the cheaper it gets, the more interested it's going to be for me to buy, but anywhere around the 120, 130 range would definitely get my attention. But I think on my brokerage right now, I have some triggers set in the 140 range. Now, another one, the higher yielders that I've sort of been avoiding for a while, but now it's getting closer into the range where it's getting interesting, is EMB, or Enbridge Inc. Now, Enbridge on the all-time is up over 380%, not including dividends. Year to date, it's down 14.07%. And even though I already have some decent exposure to oil and gas with different holdings of mine like EPD and others, Enbridge stock under $30 per share is going to definitely hit my radar, and I'll probably start buying some more shares from there. Now, with the recent red, Enbridge is offering almost an 8% trailing 12-month dividend yield with some decent dividend growth over the last 5 or so years. Now, like I said earlier, at this current price, it's not necessarily an absolute fire sale in my opinion, but anything underneath $30 per share, I will probably be stacking some more shares of Enbridge pretty soon. Now, the last and final stock that's definitely on my radar, but isn't necessarily super cheap right now, is Main Street Capital, or ticker symbol MAIN. Now, Main Street Capital has had a crazy last few years, outperforming the S&P 500 on multiple different time frames. It's around 2007, and that's not even including dividends. Now, because Main Street Capital is in fact trading towards the higher end of the 52-week range, I would much rather grab some MAIN if it drops down close to around $35 per share, which is where I grabbed a bunch of MAIN. But with the way that Main Street Capital is trading currently, it is offering a forward starting dividend yield of around 7%. And of course, Main Street Capital is a monthly paying dividend stock and has been paying monthly dividends for quite some time now. Now, when it comes to companies or stocks like MAIN, you're not really going to see or expect massive dividend growth, but they still have been raising their monthly dividend for quite some time now, which is of course great to see. So those are 5 different stocks that I think are currently offering a buying opportunity for a long-term dividend growth investor like myself. Now, of course, keep in mind every single investor is going to have a different strategy and a different goal, and of course have different stocks that match closer to what they're looking for. But for me personally, to give you some more context, I'm looking for stocks out there that do have some decent growth potential. But as you can see from the different stocks that I picked in this video, I'm more of an investor that does favor a little bit of a higher dividend yield off the top, just because I do favor cash flow quite a bit. Now, there's lots of investors out there that would much rather invest into a lower starting yield dividend stock or ETF out there because they might favor much more growth potential in the long term, along with things like dividend growth. And although I definitely want my overall portfolio to grow in the long term, and of course I absolutely love investing into different stocks and or ETFs that do offer significant dividend growth, a lot of the single stocks I'm looking for at this point tend to be a little bit lower beta, offer some growth potential, but they need to have a decent starting dividend yield because, like I said, cash flow is very important to me. So there we have it. Those are 5 different stocks that are currently on my watch list. Again, within different ranges. Some of them I would consider more of a fire sale. Some of the different stocks I'm watching a little bit more closely. But as far as all these stocks go, they all offer a few different things. They're all offering somewhat of a good entry point, or at least close to it in my opinion. They all have a decent starting dividend yield, at least for the most part. They all have a strong history of paying dividends for a while. And of course, some of them more than others have some pretty strong dividend growth. But now I want to hear from you guys down below when it comes to the most recent market turbulence and a lot of different dividend paying stocks being on sale. First off, which stock that we went through in this video is your number one favorite if you had to choose one? And the next thing I want to know is which stock across the entire market do you think is on an absolute fire sale as of right now? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.